screen number 2. You think I'd learn by now, wouldn't you? That you think I'd learn by now, wouldn't I? I've got other videos I've been watching on YouTube, and they've all started playing again. Hey ho, never mind. Right, let's get going. Wow, yesterday after that race out of the trap with the FCA regulatory buy-in, the market went straight up to the target, then took nearly all day to come back down again. But it eventually did that. Well done to everyone that did that and hung on then there. And also the puts made some nice rupees as well. New all-time record highs for gold. Where's my edge? My edge. Have I opened it today after writing it? Oh yes, it's on a different page. Right, yeah. So there we go. Labor Day yesterday, market was closed, of course, and yeah, everything just moved pretty slowly, really. There's quite a bit of data to read through this morning if you've already read it. But I wanted to hone in today on the FTSE. We're kind of under the 1 hour EMA, and we're slowly, pretty slowly declining. So be quite interesting. Now I think we'll get a rah-rah on the S&P with Labor Day being closed yesterday. So unfortunately, I can't do this afternoon. Physically leaving this afternoon, tomorrow, so we're out taking them out for our last day. Gold, well, yeah, did enough from yesterday, especially overnight the Asia Pacific market, and we've got a bit of a pullback on USD Swissy as well today. So we don't need to have lots of assets to trade, but what we do need to do is to see if we can actually trade them well. Get rid of that. Let's just have a look. What have I got on the I was going to put up something else. Let's have a quick look. No. Let me have a little look a minute at something. I did put in yesterday, I don't know if people found it useful or had time to, I'm just going to look at this, section that I put on the edge yesterday. I wrote that, the September effect, and why stocks are going to be quite volatile, and why really September is the worst month for stocks and indices to trade. So if you're interested, so anyone who's watching this from YouTube and wants to understand why September is the worst month of the year, with historical data on what happens and explanations around everything. Once we've finished on here, just type in the word yes, please, or September, and I will send you the September effect documents. For everyone that's got the Daily Edge, you have it already. It's in the back of yesterday's Daily Edge. So yeah, if you want that document, read it. It's gone. Just send it to you free. It's nothing. Right, today, well, that overnight, we've got all the bots in, and what I put here is we had a 15-minute bar here. After the overnight highs, let's get rid of this. After the overnight highs, a new all-time record high, I was a little bit hesitant about taking a direct double tap break here. So we increased this a little bit, and quite right to do that cautiously, because the market did need to have a wee bit of a retrace. What time have we got? About 5 minutes, 4 minutes. So I put this in the room this morning here. Oh, I said I put it in the room this morning. I'm sure I put it in the room this morning. Hold on. Let's have a quick look. FTSE. Did I? Oh, I only thought I did. Oh no, I did at 6 o'clock this morning. So these were all the bots running and whatever, and that was the bar there. And I didn't want to get us in early. I think we will go a lot higher today, but we do have a 15-minute run out of the trap effectively. If we do a very quick fib on this, we can see where the 78% retrace level is here, and that's been tapped in now. The trade, as you know, on this on 15 minutes is from the 78% retrace level back up to the 50, which is roughly here, and the stop there. If you want to engage in this, you can do. Where's the 50? The 50s here, there's no 50s there. That would be the trade. I'm not personally going to do this because I'm talking through everything, but as individuals, you'd be able to, I'll mark this up just to show. That would be the trade. So you wait for the 78.6% retrace level on a 15-minute. You buy the 78.6 and you head for the 50% retrace of the previous 15-minute bar. And I think what I might do is just if the market does come back down again, then I might just have a little touch in that. I'll call that 8.5 and 8.5 at 2%. Well, I might not get it, but if you guys want to do, I've got to talk through all this. So, you know, as I missed quite a few trades myself when running these, but I'm going to put this in here as a wave front run. We're looking at 34.83.8. That will do the job there. If I can get tagged in down here, then that would be great. If not, then I'll wait for a 15-minute bar. Right. We also did a early doors, couple of early doors signals. So that was the goal, FTSE, the gap, and then USD, excuse me, walking the dog after that, my full espresso. Right, so we'll go and have a look at quickly at the FTSE. Right. Oh, right. Did anyone take the early bird on the FTSE? That missed the gap by, less than I missed that. Too busy writing the reports. That's a bit of a shame. There was the early doors gap trade. We missed it by 1 pip. Anyone in the room? Anyone in the room?
No, I did it earlier this morning, but I missed that one. But I did one on it earlier this morning.
Right. Okay. It's I don't mind losing trades. It doesn't bother me in the slightest. What does irritate me is when you miss by 1 pip. But there we go. It's because of the wider spread on the mornings. But we'll leave that's obviously not an official live trade. We'll do that. The AT on the FTSE today is 9, and that DAX I've put down. The DAX is 29. I also want to look at USD CAD and maybe a look at the DAX after the market opens. The other thing that we did, we'll best stay on the FTSE because the market's going to open soon. But it's 8.5 and 8.5 from where we are there. It looks like it's, wow, being stopped. Right, we're going to walk the dog on this one very, very quickly with a 9 and 9 pips, guys, and 9 pips. And we're going to walk this down. Let's go a bit further. 82, I'm just looking at where the action is. We just put this in. I want to follow it. I want to get into the 2-day low if I can and bring this down. There we go. Get into that 2-day low. We'll round this down to 90, 80, sorry, I should say. Market could go considerably lower. We don't know. We're looking at for that gap roughly 16 pips. if it will accept 16 pips. So it's quite fast and furious in the morning. So you can see here the market came all the way down. Where did we come? All the way down to we would have just we front run there, didn't we? It's 72 and it's 70.1. So we would have missed that by again 1 pip, which was the cam trade, unless anyone front run the cam trade. No. I know these are all very fast, but it is at the open. Things are very fast and furious. So you've got to be nimble and you've got to be able to react to the market sharp. Clearly, I'm just going to put another a trade on.
Alert triggered.
And we're going to have a look at alert triggered in just 1 minute.
Alert triggered.
So I do what I don't want to do is get tagged in and took further down. If we come down to, if we do manage to come all the way down to CBOS, we could put a trade on CBOS in case we get that little bit of a push. But that'll be a 9 and 9 off CBOS up down here. So it's 70.6, 71.6. We want that 72. Which is, you can see, would have just missed by the spread. So if the market does come down quickly, but I'm not sure it's going to do that. And we'll probably see this return back up now. And we're looking for, what are we looking for? 9 pips. Was it 9 pips down? We'll get rid of this. I don't think it's going to happen. So we're looking for 1.77% on the FTSE. I'm just going to write there in 918, 9 pip stop, 16 pip target. Zoom right down. See the markets. This term trade off just for a moment. Get rid of the cash pivots for a moment. And get rid of this. It was yesterday's close. Got whacked. The market really has come down to a pretty key level down into here. If we break these levels, then we're going to come and test the support really, which is around about 145, and the 200 EMA is 146, something like that. And if this market breaks, we could easily just drop down into, I think I had the market around about 140, 125 to hold anything positive. We are trading under the 200 EMA on the 1 hour, but above the 400. So we are still positive, but the market is, you've got a closing gap from the 25th up here. The market has been very slowly working its way down, but it has been running up and closing highs on, albeit very, very small. Let's get into some, let's leave this at 15 minutes, to spike down to 15 minutes. We'll turn the cash pivots back on and put the trades back on. And we'll see where we get to. In fact, I think I'm going to put this trade back on again. This 9.9 at 72 if we get tagged. This market is looking pretty dapper today, isn't it? What did I? We're going to get, it looks like we might get stopped on here for the first official trip. Yeah, we are. So we're immediately into the camera on the breakout shot, the cam trade. So a cam trade followed by a 15-minute bar in addition to close the trade. So we're down 1%. That didn't work. Radio. Let's have a, whilst that's in set, let's see where we, oh, the screen's frozen. Let's see where we are. Right, so things that we're looking at. We did walk in, well, quick. Let's have a look at gold, see if gold's responding. For all the people that are watching on YouTube, just ignore that absolute mess. If you see a GUI wheel on it, all that means is it's a robot trading. We've got use a lot of robots on gold, and we're looking to give it some on gold to take this fib roll back on. So we're looking for a 15-minute bar reversal, and we've got targets of 35.20 and 35.51, which are Fibonacci extensions. There is this trade here. Does anyone do this 15-minute bar trade? By any chance? No. Not 15-minute bar. 78.6 and a 15-minute. You don't have to do these trades. The 15-minute bar is a good enough weapon, or a 15 tracker on gold to extract money out of it. So on the 15 minutes, we're still waiting. If we get tagged in down here for 78% reach, 78.6% retrace on that overnight 15-minute chart move, then we'll be in. Otherwise, we're going to do a 15-minute bar. Right, let's go to the other things, which are, we have USD Swiss as the official FX today, wasn't it? Right, now explain for the guys, some of the guys that are new in the room, you won't have a clue when I typed in, we'll go and walk the dog. Walking the dog, as it was then, before the bar changed its shape, was actually, we walk the price up under the close, under the open of the last 1 hour or 15-minute bar. When we see the market as being completely overcooked, overbought in this case, and we're looking for the market to fall away. It's just a way of getting into the market when you're busy and doing other things. So sometimes I do the walking the dog trade while I'm just flicking something in, waiting for it set up, and try and let everyone in the room know that we're looking for a bit of a rollover. So zoom out a bit more.
Alert triggered.
We've been
Alert triggered.
trying to trade this channel coming down.
Alert triggered.
Hang on a second, we've got some alerts coming.
Alert triggered.
Get these alerts and show you what they are. So USD Japan, I would forget USD Japan. It's rolled right up above the. It's just on a bit of a rip, I think. That was yesterday. Right, and let's get rid of the alerts that we need. Right. So what we're doing really is selling any strength. This market is pretty weak, very weak indeed. And we've had 15-week lows on the dollar, and we're just getting this bit of a rah-rah in the morning after Labor Day. People are just buying up, but I think this is going to be short-lived, and I cannot see, looking at previous structures, lower highs, lower lows coming in into the end of the month last month. We should not see anything breaking here. We're completely overcooked at the moment, and quite happy with that position now, and to just let that roll over if we can see it rolling over. The other thing to wait for, and you can see on a 4-hour, it's overstretched. On a 1 hour, it is overstretched. And what we're looking for is it to fail somewhere between where it is now and 80-30, something around there. If you're not already in and walking the dog, then of course the weapon of choice here would be there's some nice fractals here. There's I'll just get my pen out. So there's a nice fractal there to have a crack at, a nice fractal there to have a crack at on 15 minutes. A 15-minute bar closing under the, the 9 EMA there's pretty good as well. Get rid of all that. We don't like that penalty now. These are best now. Yeah, so that's a nice 15-minute bar. But if you look at the leg, that has been quite harshly rejected. This is called the wick, and the price has been rejected quite hard. And bears try to come in again within the 15-minute structure, and it was again rejected. Now we've got a rejection candle here, so we've got a wick to both sides, and the wicks are larger than the body. So this is an indecision candle. When it's an indecision candle and a Heikin-Ashi candle, you quite often see if the candle closes green, it will still try and go to the top side a little bit. So this fractal, I'll show you the fractals. The fractals there mentioned and there. So there is a 15-minute fracker that you could use here rather than a 15-minute bar. I would not use a 5-minute fractal structure yet until we've got structural breakdown. And what I mean by that, if I can reactivate this, is we've got higher lows coming in here. So this is structure going up. I've got the structure going up to the top side here. Until this structure has actually been broken,
alert triggered,
then I wouldn't go into a smaller time frame. I wouldn't go into 5-minute fractals, because you get false signals and you just get stopped out. I'm just looking at where the 5-minute fracker here. So this is where you want to go for a fractal reversal on 15 minutes. As you can see here, the mark, the American, the dollar is coming in. And if we overlay the dollar, we'll be able to see the dollar, in other words, the Dixie. We overlay, I'll show you.
alert triggered,
You'll be able to see the market running up. So Dixie. So I'm putting the Dixie in. Well, that's close together, isn't it? It's just about a 1-for-1 that. But you spread a little bit apart. You see so this instrument here, this is the dollar basket, and a dollar is absolutely racing to the top side. Now, let's look at the economics. Has there been some news released? There hasn't, not that I can see on the eco calendar, but that seems quite an impulsive.
alert triggered,
But you can see the dollar basket. The dollar is rushing up, and obviously it's providing strength against the Swiss franc. For the quite a few past few days, every time we've had a little rally up on here, and we've got to be patient. Inevitably gets hammered by the bears at the moment. So this has been quite a key level here where the market's come up, reversed, and took some money. Hit here again, we took some more money. We hit here again, took some more money.
Alert
And now
triggered.
the market went into a bit of a
Alert triggered.
They get rid of the alerts. Triggered on USD CAD and triggered on USD Swiss. We'll get USD. We better look at CAD. I'm interested in CAD, and I have been trading CAD, and do I want to continue trading CAD?
Alert triggered.
I just stopped at entry on CAD, and that's just took me out. I'll show you where we were. That's why that CAD trigger.
Alert triggered.
CAD trigger is there. So I'm going to put an alert up here. What I get again? Maybe 0.5%. But this has been a very, very good asset for us to trade over the past few days. And made quite a bit of money out of it. It looks like walking a dog may have gone a wee bit early. We're just trying to get a position in before the Northern European market opens, which is always an issue. Right, let's just take the fuckers off a minute. We put USD CAD on. It's not in the report. It's just something I was quite interested in selling into the strength. The markets come down. You can see every time we've had an impulsive move, the market has just tried to. It's just been sold off by the bears. Got quite an important micro level here on the 1 hour. You can see here, go over the sideways movement. It might be worth a little tickle on that. Coming down. I put an alert into the top there. This is not necessarily what have I got here? I'll just show you. I put this on a Word document. It's just my AI machine that goes in and gives me some raw data. I just pull this up. I'm just wondering whether I can extract that. There was a recommendation that had come up on the AI. Here, USD CAD. I had a look at it and thought, well, I understand the explanation. I had a quick look at the links, etc., and thought, well, I wouldn't call this a super high probability. I'd prefer to just focus in on US dollar Swiss. And the reason for that is when you look here, the market is wallowing down on the lows. But if it does come up a little bit more, then it'd be worth probably having a trade. But if you look at these big rejection pins, we've got rejection to the bottom, rejection to the top. The markets, what further or what is this? 4 hours.
Alert triggered.
1, 2, 3, 4, 5 hours.
Alert triggered.
20 hours of the market just going sideways.
Alert triggered.
So here we are here. Could have a little look there. Market is very dour today. this is the opportunities for this, you know, to come down back down into these levels here. Needs to break here. If we can get some small bars, like a 15-minute bar here, market rally up and then put in probably another 15 minutes, stuck me toe, 15 minutes to half an hour of a couple of 15-minute bar here before we reverse back down. That could be quite nice, that one. Let's just have a look at what's happening with USD Swiss. Nothing happening on USD Swiss. Still just running towards the previous highs. But again, here would be the ideal buy would be a 15-minute bar from these levels here. So we're not far from it. We're 0.5%, using half of the risk management stock, which is 1%. So we're 0.5% in the wrong direction at the moment, but you never 0.5% down or 0.5% up. You only realize that when you close your trade. So I'm just looking now here. We've done 2 trades, 2 failures. Not good. Not good this morning. That's the way it goes sometimes. So USD Swiss, keen on this one. We're trapping the price up here. We're already in the market. If we can get a small 15-minute bar, then I'll take that reversal. Sorry, USD Japan here is, as soon as it broke here, just walk away. It's above the 1 hour 2 EMA. Just let it do some. Not interested in that. CAD is the one that we are interested in. We've had the market rally right up, and we just want to see this fail. What I'm going to do now is I'm going to put an alert under
Alert triggered.
Support level here. Let the market do what it wants. The market is always right. I'll put an alert up here and see what happens with this price. If we just take a little look back, you can actually see from mid-morning, well, from nearly lunchtime yesterday, the market has just slowly refused to come down. It's just meandering further and further up on the 15 minutes. If you look on 4 hour, this is just a small pullback, isn't it? But when you're day trading and using small amounts of hit movements to get your money, it's fairly critical that you get it right. It's in the stop line. So we're on a 23% retrace. Could easily do 50 to 61. And if the market pulls up beyond here anyway, it's a no trade anyway, because we do not go against a 4 hour 200 EMA. Absolute strict rule, do not do it. Just put a marker in there and see how that looks at a smaller time frame. So there's one marker. For 200 EMA. So it's pretty key here, isn't it? Pretty key the market stays under that level. So we'll just let it do what it's going to do, and when we get the alert, we'll just trade it. And with this kind of looks like it might be failing here on that rejection on that wick. Feel like I'm sat on the floor. The gas in my chair's gone. The gas in my chair's gone down. Right, that's better. Feels like I'm looking over a keyboard. This just needs we need a structural breakdown really to get into anything less than 15 minutes. Let's go and have a look at gold. We've got some alerts set, so it's just a matter of being patient and waiting. Well, we've been tagged in on gold. Did the bots must have done the thing and come out with a profit? Yes. Bit of a shame that the bots were up 17 pips a piece, which was quite nice, and they're both closed out for a small profit. Bit disappointing, but they're sat there still waiting. We can take this trade off. We don't need that breakup now. This is our 78.6 fibble trade. Stops in the previous swing low on the 15-minute, which is here. Have to wait and see what we get there. Again, it was with gold yesterday. It was just waiting and waiting and waiting, wasn't it? The market coming down, coming up, providing a little trade here around about 2. There's a class 2 bar, absolute perfect storm bar there. And letting that run and hitting the 3,500 target that we wanted. We traded yesterday. I'll show you the failed trade. I probably solace in the edge. Everything we do, we put in the edge. I think I recorded the first trade as a failure. It's important. That's the entry guide. It is really, really important. To record your failures and analyze them as it is your wins, because you can't learn. You know, if you win all the time too much, you can get very, very complacent. So gold yesterday, the first trade was stopped by 1 pip. Yeah, it's a bit of a pain in it. But again, if you want the daily edge is on my website. Which is Dunk. I'll just show you. Daily edge, so news and indicators, and that's the daily edge there. And it's just tells you about the edge there. There's a few reviews on what people think. £10 a month, that's all. To be perfectly honest with you, I think you need to bloody head red if you don't use the daily edge. That's what it's all about, getting the edge. But everyone always knows better. But there it is if you want to get your hands on the edge and get an edge in the market. So this was a class 1 bar, which long wick, dismiss. This bar was really a perfect storm. Really, really good. Really, really good bar. If you took that in the afternoon, then of course, you have done really, really well. The bar that we failed on was, look at this was a lovely bar here, and that was the bar that we traded. I thought, wow, we're off, and then it stopped before the market then took off again. So even though you get the a perfect setup, it doesn't always work. So, and then another setup, and then that one did work. Now we're doing a 78.6 fibber retrace buy, but we're waiting for a 15-minute bar as well. The robots will still be sat there switched on, to show you. I've took the Dirty Dozen ones off the website now for people to buy. There's enough people that are using the Dirty Dozen now. And to be honest with you, the more, because they're only a couple of quid, more hassle than they're worth. I'm not decrying anyone on YouTube, but if you buy the bots on
Alert triggered.
YouTube, we're running about 17% a month profit, something like that. But if you're not part of my room, you really don't understand how they work too much, and all the questions they get, it's just not worth the time.
Alert triggered.
Time and effort. Just being realistic, the bots are to help us in our trade and make money for us while we're learning and while we continue trading it. So they're really good. They're really, really good instruments. But if you're not in the room, you'll ask loads of questions.
Triggered.
And, really, what we're doing then is starting to teach you how to actually trade.
Triggered.
And it's just not worth the time and effort. So I've took those off. But
Alert triggered.
and the gold ones aren't available anyway outside the trading room. So we've got what have we got? We've got I'll take that one off, USD Japan.
Alert triggered.
It never triggered in it. I don't think it will. So we're leaving the gold ones on to carry on the run. I've got an alert trigger going off. So
Alert triggered.
that is USD Swiss.
Alert triggered.
Go back to USD.
Alert triggered. Alert triggered. Alert triggered. Alert
There
triggered.
we go. There's the alert triggering. And we're looking for that reversal. The dollar really has got a bit of a rah-rah on, hasn't it? Right, so looking for that reversal. Let's look how the CADs are looking. USD CAD. Again, yeah, that's I've got the alert under here. I think we want to walk this up a little bit. We'll get rid of that and we'll move this alert up a little bit further, trapping this price. We do not want to see the market break 13,780. As soon as it breaks 13,780, then we'll scratch this. It's not part of the edge anyway, but I do like the look of it, but it isn't going to need a rejection. And looking at what happened before the market coming down, then having a rally, it's sold off rapidly all the way down to here. Now, if we can get a piece of that type of action, that would be great. Even there would have been the 15-minute bar. So that was a 15-minute bar. And you would have 26 pips, and you would have had, just nip and tuck, 26 and 26 would have been okay. But nevertheless, if you can get in the market, grab your rupees and get out, that's what it's all about, isn't it? So,
Alert triggered.
put my alert on that level. Forget that level, then for me, I'll bet it off. I'm not interested. So let's go and have a look at where we are with other trades. We're not in the FTSE, of course. So that was the second stop. Gold, we're in gold. USD Swiss. Gold bots have been in and out for a small profit. Let's just go and have a look at what's happening with this index while we wait for an alert. Zoom right out. This is not looking fantastic at all. We're coming down to the 4-hour 200 EMA on momentum. Where's the last time it came down? Close. Beginning of July. It's pretty good level for people buying off the FTSE for swing traders. Let's wait and see. I'm not going to continually try and buy a market that's fallen. That's just madness. There are absolute key things that we do look at, which is candle breakout short, very high probability trade, but even a high probability trade can fail. You can't have them win 100% of the time. So what we're going to do now is keep our powder dry and wait. And the waiting level for me would be a break back up and alert just above CBOS. If we can climb back inside camera breakout long, then that's absolutely fine. We might have opening range breakout. Let's just have a look. We've gone past the first 30 minutes. No, we haven't. Now there's the bottom of the range. Top of the range was here. So there's the opening range. Market's tried to come up and it's dropping back down again. And so we don't want to be really interested until we see the market come back inside CBOS. If it comes back up inside with a candle, a 15-minute candle that breaks, then that can be bought. But we're really into testy levels on momentum for the 4 hour. So you are trading with 1 hour momentum. So if you wanted to do opening balance range, two things you could do. For everyone's got the document. If you look at the previous slide, if you want the actual strategy, if you go to the previous slide and say what everyone else has said there in the comments, yes, you will get a link to a free copy of the strategy if you want that. But we are on camera breakout short. We are trading under the 1 hour 200 EMA. So although it is valid, I'm personally not going to take it. I'll just talk it through. So talking a break of this range and a close on the 5 minutes will, let's say hypothetically, you get a close somewhere here. You want your stop above the midpoint of the 5 minute, the midpoint of the opening range. And then you want to look to see if you can get out 1-to-1 between critical pivots or previous dips. And there is a 1-to-1. The other way to trade it would be to use, and this would be my preferred way to take. Where's my fractals gone? I just gone and deleted the fractals. I did, didn't I? Right, okay. Let's put the fractals back on. Yeah, I'm just going to delete this. All right, there we are. That's the fractals again back on. So what I would look for would be a fractal break. So I want a fractal break outside of this line. So for instance, if this line was under here, I would take a direct break of the fractal and a stop above the fractal and go for a 1-to-1 risk reward. As if you want to do that, we're not going to do that in the live room. We're going to wait patiently for a reversal. That's I think we'll get a RAR out the trap this afternoon in the American market, and that'd be a good opportunity for the market to then reverse and go back to the top side. Market's still quite slow this morning. Well, they're slow to respond to a long trade. The market has just dropped, hasn't it? So we're holding the market here, closing down. One thing that would be interesting, when this market does get bought up, later this morning or this afternoon, the American market opening, then we'll get that closing gap and the catalyst will be here. The pivot points will then look at trading this up. I keep mentioning about that, don't I? It's all pretty boring trading just at the moment with alerts. If you want to, if you're interested in the room, I can show you how to do a quick and dirty pivot trade. What was that? It's just triggered. It's just an alert on US 500s and US 500s coming down. So quick look at that. If you're interested in doing a quick and dirty pivot tester using doing an algorithm, shout out in the room and I'll do that for you. Everyone's quiet on YouTube, aren't they? God, we've only got 8 people. It's hardly worth doing the YouTube. 7 people, and probably won't do one next week. Everyone's quiet, not doing anything. This was for the benefit of people on YouTube, but if no one's watching, then I won't bother doing it. Right. Let's have a look. You can see it breaking now. What I want to see here is the form. You can see now it's nearly forming a fractal. I need this bar to stay above this bar to form that hasn't broken down. Form a fractal. Talk about slow days. Really slow. I just wanted to show you how to actually do this trade. It's so this would be the 5-minute bar close here. If this closes under here, then your trade would be a break of this 5-minute bar here. Stops under here, but you've got S3 in the way now, so you've got some pretty harsh running to do. And again, there's a wall trade here, guys. A wall trade to do, which is quite, it's run down quite a bit in the first hour, hasn't it? That's a 59 pip draw. Just have a quick look at the ATR is. 60 pips would be a 5-day ATR drop. So that would be the 5-day reversal as well. Actually, that would make that a very high probability trade. If the market came down to S3, we would want a FTSE 15% ATR is 9. We did do a 30% ATR stop and target, which would coincide with a 5-day reversal and the wall trade combined. Since I look at that, looks in a larger time frame, this is right on the cusp. I'll bet, if the market actually closes down here, then kind of we are no longer positive on momentum. We've got this bottom to bounce off, so I put on the edge that we're looking, the range is at 140 to 120, 9140 at 9125. If that's broken, then all bets are off and go home. It's market's gone short. September is the worst trading month there is for indices, and it's proving absolutely right. So don't forget, if you want the document, the September document, give us a shout after the market and just type the word September, or please send me the September document, and I'll send you the September document. I'm just looking at another screen. So what I'm looking now is looking at another way of attacking this with hopefully might be a September low on a monthly FTSE option. So you want to be out 20, 30 days out of the money. 17th of October, 17th of October will be all right. I'm just looking at where we are with the options. Be looking to twos. Just looking to come back in these highs, so 93s, 93.50s, we've got 93.50s at 57. That's a bit rich. So 91.25. So it's 91.25 plus. So if you're in the room selling some, I'm going to sell some 91.25 puts. Yeah. Done. Right, let's have a look here. We're looking at this potential wall trade. Do you know what? So listen, you can say, I can't see this happening. But wow. So the S3 is 9128. So we're going to front run this at 30. 5-day ATR. That's if the market comes down to here. If the market comes down. So this is the break. So this is the break here that we're talking about, the 5-minute break on the opening range. The order strategy, if you will, opening range balance. Break that bar, stop above here. Or the preferred method would be a fracker. So let's get that out. I'll show you what I meant by that 1-minute fractal. So there's a 1-minute fractal there. That would have been the trade. We're right on that trade at the moment. And the fractal would have been break of this fractal here. And the stop would have been 2 pips above here. So 58, 61.4-ish. There, that would be the trade there. Yeah, fractal, 1-minute fracker down to the side. You've got the headroom. We've just been stopped out on got. Do you know we've been stopped out on just about it? Before 8 o'clock trading, we didn't do so bad on gold. We've now been stopped on this. Now the 78.6 rarely gets stopped. And we got stopped. So the bots made a few rupees and we've just lost again on here. So I think from a risk management point of view, I am going to stand down until this afternoon. The markets doing the strategies that we're applying at the moment clearly are
alert triggered
working. So the market is always right. I think if the market comes down into this next large stop levels and then produces a 15-minute bar, which is not going to happen in the next half hour, then I would probably be interested again, but can't really be interested in taking a 15-minute bar reversal in this open air. If the market comes down into here, then that would be an interest. But until that happens, I think I'm going to stay away. It's all about conserving the bank. People have been trading the room, following me, not trading the early doors trades. You'd be down 3% now, and that's max. You don't want to be doing anything more than that unless you're going to get a super high probability. If you traded early doors in the morning, then we're not down 3%. But for the purposes of what we're talking about now, we are. So you got to observe risk management and not just observe it, practice it. It's all about preservation of your bank.
Alert triggered.
Right. let's go and have a USD Swiss. We're on a 24 pip stop, and I think it's going to come and test us. So let's go and have a look. So gold, just wait for that reversal. Gold is in a bullish run. You've just got to be very, very patient now. Wait for some 1 hour levels, not 15-minute reverses. They're obviously not strong enough. And wait for the market to put it right into this level here. So this level here needs to be tested.
Alert triggered.
The issue you've got here, of course, is I just didn't
Alert triggered.
think the market would come up here.
Alert
How
triggered.
wrong can you be? So this stop is probably going to be too tight. But you know, I don't want to move. I'm not going to move my stop. My stop is my stop. But
Alert triggered.
the market makers will probably just blip this through. If it's going to stop around here, they'll probably blip this
Alert triggered.
knock out people doing exactly what I've done with a tight stop there. And there it is, it's gone. So look at USD CAD. So again, it's just a watching brief. Not in, let it run, keep running.
Alert triggered.
I just get rid of these alerts. Triggered USD CAD. CAD. There we go. CAD. So yes, look at USD CAD. We're just waiting and waiting. So right in this critical level here, there we go. That was where the alert was. That's where the market needs to stop. Be quite interesting if it comes straight up. Just blips people's stops that are going to be above here, and then market collapses, and it's seems to get called a long sod, really. But you know, this is real trading for you. You can't come on and win money every single day. It's nice to do that, but the market is pretty chopsy today. I'm going to put an alert under the 4-hour 200 EMA. If it runs away, then it runs away. And if it wasn't one of the high prop things that we're going to trade, this USD Swiss is the one that's in really interesting. I think this will have just been a blip up to knock everybody out. Could be wrong. But that's me viewing. I'm just sitting and see it back up. Right, there we go. Right. Let's see where we got to on the FTSE. What's it doing? It's not coming down, is it? Not quite. It needs that reversal. I'm not going to follow this down today. James, we can't get this one, but let's see where that goes. Gold, one of reversal on gold. It's a shame I can't be around for this afternoon. It'll be the law of sod that all the opportunities come in the American market and the US Open. Anyone trading the US Open this afternoon? Oh, was it you, Rory, that sent me? Might have been Neil. I think that was Neil. Wanted the code for the Dirty Dozen fractals, so they've only work once a day. I think it was Neil. Maybe it was Neil. It was left now anyway. Right, so really, market needs to come down lower. It's coming down to this confluence area where it shut off last night. And yeah, just waiting. Box is that poised anyway. Quite interesting. We've come up with a screener on the 4-hour dipper long on the US 500. Is this worth a futures market trip? Let's just have a little look here. Look at it. It's got the 200. All the markets are rolling over. Don't forget, when I was saying before, September is a really bad, historically, a really bad trading month for indices and stocks. To the extent with the bots, sometimes I just switch the bots off from September because the market's up and down, up and down. Where really I find you actually make money in the markets in September is not so much scalping. People will say scalping. Is just doing 15-minute bar reversals, 5-minute frackers, get in 1-to-1, get in, get out, and shut the machine down. Grab your 1% and then leave it, and keep doing that every day. I'm very cautious in September. Again, same picture as a FTSE really. And some 64.50 calls, cheapest chips at the moment. I think I'm going to call it early today because we're not going to get a reversal set up. In the time frame that we've got. We're coming interestingly down to a decent level now on gold. Gold's down 0.14%. It's nothing. Buy some 3510 calls. They're under £10. Any questions? I'm going to call us. I think I'm not going to hang around. I'm going to get some breakfast. Any questions before I go, guys?
No, I'm all right, thanks.
No. All right, I'm going to call it there, and we're going to come back bright-eyed, bushy-tailed, and we've given the market, we've loaned the market a few rupees for today, and hopefully we're going to on back this afternoon. I expect the market to be quite volatile and bouncy to the top side today, so you might get a really good trade on the S&P. I can't be on this afternoon, which is a bit of a shame, but there we go. Someone, whoever CG is, crude is creeping up on the 5 and 15. I'm not interested in that. Let's have a look anyway before I go. Someone's commented, so let's have a look. Crude's turned positive on the 1 hour. It's right on a double top area, which could be a point of flushing people out to come down again, of course, but it is positive. It's positive on the 1 hour. Yeah, crude's the issue with crude is you run a double top here, effectively coming in here. It's going knocking the stops out for the markets to come down. It's what latitude do you have until you meet the next big resistance level, and where there's your retrace for your 15-minute bar. If you get a retrace here and then a 15, if you get a retrace here and then a 15-minute bar, you've got the latitude here to do a long trade on crude, and technically it's long. So yeah, CJ, thanks. Right, well, I'm going to run, and I'm not sure whether I'm going to do YouTube next week because hardly anyone's here, so no one's really chatting, so I think I'll ditch the YouTube lives. But we'll be back on tomorrow, guys, in the room as usual, and I will see you all tomorrow. Cheers, guys. We're on.
Cheers, Dave.
Cheers.
Cheers.